Bitcoin is trading around $65,561 right now, and I keep coming back to the same thought. I can't look away from this chart. Not because it's doing something dramatic on the surface, but because underneath it, multiple forces are starting to compress into the same zone. And when that happens in Bitcoin, things usually resolve with volatility. So let's go through it step by step. Now, first is the price. Bitcoin is sitting in the mid $60,000 range, no breakout, no breakdown, just consolidation after a significant move. But what matters more right now isn't where price is, it's what's happening underneath the price. The fear and greed index is sitting at 20. That's actually extreme fear, and this is important because fear like this doesn't appear randomly. It usually shows up after traders have already been punished by volatility, after confidence breaks, after positioning resets. But here's where the story gets more complicated. Even with extreme fear in the market, Bitcoin ETFs are still holding over $100 billion in assets. Total accumulated Bitcoin exposure is roughly 678,000 Bitcoin, and net inflows are still positive. That creates a split structure. Retail sentiment is fearful, but institutional exposure is still structurally present. This kind of divergence is important because historically, major turning points often happen when positioning doesn't match sentiment. When one side gives up and the other side keeps accumulating. Now let's talk about momentum. Weekly RSI is around 37. Daily RSI, on the other hand, is around 41. So we're clearly not in an overheated environment anymore. Momentum has cooled, but that cooling doesn't automatically mean reversal. It just means the market has reset from prior strength, and resets can either lead to continuation or deeper correction. Now, extreme fear like this is not normal in strong bullish expansions. In strong markets, dips are usually shallow and fast. Fear spikes briefly and then gets absorbed. But right now, fear is persistent. That persistence tells us something important. The market is uncertain, not just correcting, and uncertainty tends to produce wider ranges and longer resolution times. Now let's zoom out because Bitcoin is below two major trend markets. 200-week EMA around $68,000 and 200-day EMA around $78,000. These are not random lines, they represent long-term structural thresholds. When Bitcoin is below them, the market typically struggles to build confidence. When it reclaims them, sentiment often shifts quickly. Right now, Bitcoin is still below both. So structurally, this is still a corrective phase. Now, let's look at valuation because MVRV Z-score is around 0.41. This matters because it strips emotion out of the equation. It compares market value to realized value. And historically, high readings equal overheated markets and low readings equal to undervalued markets. At 0.41, Bitcoin is clearly not in an euphoric phase. It's much closer to historical value zones than speculative extremes. That doesn't confirm a bottom, but it does shift the probability structure. Now, the reason MVRV is useful here is because it forces perspective. When price rises, people assume it will continue forever. When price falls, people assume it will never recover. Now, MVRV doesn't care about either narrative. It just shows where we are relative to historical behavior, and right now it suggests a reset environment, not a blow off top. Now, let's talk about something that changes the structure of this cycle compared to previous ones. Spot Bitcoin ETFs. We are seeing over $54 billion in total net inflows, around $102 billion in total assets, and consistent daily inflows even during fear phases. That matters because it creates passive demand underneath price. So even while sentiment weakens, there is still structural buying pressure in the background. That's not something previous cycles had at this scale. Now, let's talk about an article posted on Cointelegraph. Now, this connects directly to recent market data, and according to Cointelegraph, Bitcoin's order book structure is showing early signs of demand building around current levels. Liquidity is increasing on the bid side, and buyers appear more active between roughly $65,000 and $67,000. The key idea is very simple. The market is not just drifting, it's forming a liquidity zone. And when liquidity clusters like this, price often reacts. Analysts are now pointing toward a potential relief rally towards $70,000 if this demand holds. Not because of speculation, but because that is where liquidity and resistance naturally converge. So in simple terms, if buyers defend this zone, relief rally becomes likely. If they fail, downside continuation becomes possible. Now, let's talk about what a relief rally actually means. This is important because a relief rally is not the same as a trend reversal. It's a reaction move. It happens when price becomes too extended in one direction and rebalances. So even if Bitcoin moves towards 70k, that does not automatically confirm a new uptrend. It could still be part of a broader corrective structure. Now, there's also another article which I found interesting here on the Cointelegraph, and it's talking about miner capitulation. Now, Bitcoin miners are once again under significant financial pressure. Profit margins are tight, operational stress is increasing, and there are signs of what analysts described as miner capitulation. Historically, miner capitulation happens when weaker miners are forced to sell Bitcoin to stay operational. This often occurs during late stage corrections, but the key issue is timing, because miner capitulation doesn't always mean immediate bottom. Sometimes it happens early, sometimes mid-cycle, and sometimes near exhaustion. That's why interpretation is divided. Some analysts view this as a long-term accumulation signal. Others believe the market still has unfinished downside structure, potentially extending into later phases of 2026. So again, we're not getting clarity, we're getting disagreement, and that usually happens in transitional phases. Now, let's talk about the key level, which is $68,000. Now, let's bring everything together. Do 200-week EMA around $68,000. This is the most important level on the chart right now, not because it guarantees direction, but because it defines structure. Below it, Bitcoin remains in corrective territory. Above it, confidence begins to rebuild. So this is the real battleground. If Bitcoin reclaims 68k and holds it, 70k becomes a realistic short-term target. Momentum can rebuild, market sentiment stabilizes. If Bitcoin fails again, range continuation likely, fear may persist, breakdown risk remains. This is the actual decision point. Right now, there is a final structure. We have a very specific kind of market right now. Extreme fear in sentiment, cooling momentum, valuation near historical low zones, strong ETF accumulation in the background, but also price still below major trend structure. Miner stress increasing and disagreement about whether this is a bottom or a pause. Now, here's my final thought. This is why I can't actually look away from this chart, because both sides of the argument are getting stronger at the same time. Bulls have structural support from ETFs and valuation. Bears have trend structure and macro uncertainty, and both are valid right now. Everything comes down to one level, $68,000. That's the pivot. If it breaks and holds above it, the market changes character quickly. If it rejects again, this range likely continues. So the real question is simple. Is Bitcoin building the base for recovery, or is this just another pause before the next move lower? Let me know what you think, guys, in the comments down below. Thank you so much for watching. If you haven't already, drop a like down below, and I will talk to you guys in the next video.